So if all it takes is just to read books, watch videos, and stuff like that, anybody would be rich trading, right? It's not that simple. You have to be able to apply and learn. Well, the thing is, you can't just only go based off of what you see in books or what you see in videos, right? And I'll get into what books I recommended earlier. It's posted somewhere. I'll look at it later. But the biggest thing is observation. And I've always said, I've been trading for almost 13 years now, which is crazy. And yeah, that's, oh God. I've been trading for 13 years now. And unlike, 13 years ago, YouTube wasn't really as populated with quote unquote free education, right? Everything was usually courses and stuff like that. So I realized I can't really, I can't learn how to trade unless I spend like $500, and I wasn't gonna spend $500 back then. I mean, hell, I started my trading portfolio with just 300. I'm Indian. What makes you think I'm gonna spend $500 on a trading course, right? So I didn't have anything back then. No, all I had was books, and I love books. But books and education gets you so far. The biggest thing that gets you even farther that no one talks about, they just say to do it, is observation and not really back testing, but looking at historical price action. No one talks about that. They'll just say, oh, study the charts. Oh, okay. How do I study the charts? Do I take my hand, put it on the mouse, and take my other hand, and we don't even know where the other hand goes. No, we don't know, right? So how do you study charts? How do you look at previous things and be able to think, okay, all right, this is something that's interesting. This is what I want to look at, so on and so forth. Obviously, each person is different. And even as cliche as that sounds, everyone interprets information as at a different way. Some people also are in different financial situations than others, meaning some people could risk and be more risk on kind of strategies versus some people can't and they want to be risk adverse. So this way of studying quote unquote the charts and looking at observing historical price action can be done in many ways. So I can't cover all of them, but what I can do is I can tell you exactly what I did, and what I looked at. And I'll actually, none of this is scripted. Usually I have like a blackboard up and I write with my beautiful handwriting and you guys can see my beautiful drawings. But today it's completely unscripted. One, because I have to be honest, I was a little bit lazy to write stuff because I've been very busy. But two, I also want to show you what my raw thoughts would be, looking at the stuff, even 12 years afterwards. So yeah, so we're gonna get into that. Again, if the stream is full, just watch JP's stream because that's the same stream. He's just streaming my stream. And if for some reason if JP's stream is full, just let me know. You can also view this on Twitter if you follow me. It's the same live stream on there. Anyway, so the easiest way to study anything is to always start at a bigger time frame. Obviously, when it comes to bigger time frame, that's usually the daily chart, because that's where you see, even though it seems like it's choppy, that is the most cleanest price action you can find because you will see actually what a trend looks like, right? Most charts, for example, you have NVDA up because everybody knows NVDA. NVIDIA is usually in a trend. There's only small portions of times where you consolidate. So being able to look at a daily chart is a very easy way to start at look at, trying to observe what's going on. So what we're going to talk about today is not only going to apply to swing trading, but also day trading as well. But we want to be able to understand what to look at and look for. So as I said before, everybody can use whatever strategy they want. But I'm just going to talk about the way I started off. So back many years ago, and even till now, but it was very dominant before, the primary trading strategy that, bankers, hedge fund traders used, big time traders used, they always used simple moving averages. Now there's EMAs, there's SMAs, there's just MAs, and VWAP and all these different lines. But what I started off personally was the SMAs. I just personally like them, overall compared to the other ones. But so that's what we're gonna go over. So SMAs, we've had videos about that. There's multiple simple moving averages you can use and different lengths and stuff like that. But we're not gonna make it very complicated. We're gonna make it very simple because I like making things simple. So you guys have heard like of the 10 simple moving average, the 20 simple moving average, the 200. Those are personally my favorite. Additional to that, I like the 50 as well, but just for this session, we're not going to talk really much about the 50. But an easy way to, what you can do on TradingView is you can go to indicators and you could search up. Ooh. My stream just disconnected. Sorry about that. My stream just disconnected.
Nope.
Yeah, I have no idea what happened there. You guys able to see my screen now, or is it the thing where it's not showing
Negative
anything?
growth.
Oh my god. Why is Discord so stupid? If you guys are on Twitter, just give me a second. I'm trying to fix this.
I'm in danger.
All right, let
I'm
me
always in danger, but that's because I can't be around. You know what? I'm not gonna say anything.
try again. Is anyone else's Discord buggy? Because I know it's not my freaking.
Mine is too.
Of course, the time when I actually start this is when Discord ends up being like this. Oh my god. It's still blank for you guys, right?
I can't see anything.
Oh, that's ridiculous. Okay, give me a second. Let me try. I know it's not my laptop, but I'll just try.
Okay, there it goes.
Okay, now you can see it. Cool. All right. Perfect. If Discord screws up now, that's gonna be sad. Anyway, if you go on indicators, you can add the 10 simple, 10, 20 simple moving average. Look something like this. I just have them as white and gray because I'm a very bland person, I guess. And when you look at this, you can absolutely use that, right? Many people use it, and that's fine. But I think a very easy way to actually interpret it is actually making it into a ribbon. Now, the cool feature on Thinkorswim and also TradingView as well is you are able to code your own indicators. Now, obviously, not many people know about coding, but I happen to be Indian, so I know a little bit. So what I did was, let me just move all of these off the screen, is I actually coded a very simple indicator. It's nothing special. And I gave it the most unique name of Bishop 10-20-200 ribbon. Now when we turn it on, it looks crazy as hell. Now I'm going to so the way you're going to apply this is I'll show you exactly what to do. You have to, when you're on TradingView, and I'll paste the code for you guys to look at it. When you're on TradingView, on the bottom left hand side, there's a thing called Pine Editor. You click on that, and then you'll be able to paste in code, and then you have to like save the code, which is just clicking on this arrow, right clicking on the thing and then pressing save. It'll ask you to save as a name, and then once you save it, you can go on indicators, go to personal, and you can pull it up. So what I'll do is I'll copy all of this and I'll post it. If you guys see there's a channel called resources, I will post it there. So just copy the exact same thing if you want. just since I'm talking about this, you can copy the exact same thing and then paste it into a Pine editor and you'll get the same thing. But anyway, back to this. The reason why it's like this, first of all, we'll make it simple. So if you double click it and bring up the indicator settings, you'll see that there's the fast SMA length, slow SMA length, and long-term SMA length. That's just the length of the SMAs we're using. For this talking purposes, I'm using the 10, 20, and 200. So that we're not going to change anything. You could change the colors, doesn't matter. Again, this is nothing special. I didn't just, recreate the market, but it's just an easier way to look at this. I usually turn off background color just because I don't need it. But this is how it looks like. So what does this show you? Well, it just shows you an easy way to interpret two things. One, SMA crossovers, and two, trend, right? So you could see like very just without knowing much, anytime you really see the ribbon be red or filled with green, it's usually bullish. And then when it's red for a long period of time, it's usually bearish, right? You can see that over here. When the ribbon is green, it's bullish. Ribbon's red, of course, it's bearish. And there's chop in between, right? Nothing is ever guaranteed to be perfect. But this, okay. What do you mean? You guys can't see my stream again?
Yeah, they can hear but can't see.
Oh my god.
Hold on. I'll stream. You guys let me know if you can see it.
Don't worry, I always record this. I'll record my demise. It was mad loud. Could you guys see Bing Bong's stream of my stream? The people who can't see it? Oh my goodness. Okay.
No.
This doesn't work. I had to do a freaking Zoom link. I've never had this issue before. But I'll give one more try. Tell me in main chat I just posted this. For those who can't see it, click on that Twitter link and tell me if you can view the stream there. I mean, you should be able to see it. Okay, anyway, I do have to move on because I don't want to take up too much time, but don't worry, this is recorded, and as long as my Indian fingers does not corrupt the recording, we should be fine. So anyway, back to what I was saying. So the great thing about ribbons is it just makes it a lot easier for newbies and noobs to be able to see where the trend is on the chart. And the reason why I said that you want to really start off with the daily time frame is because there's a lot of trend that you could easily see. So our main thing is, okay, we want to be in bigger trades, right? We don't want to always be scalping. Some people do, but for those who want to be in bigger trades, you want to be able to figure out when breakouts or what causes breakouts, right? Whenever someone says study the chart, what they're trying to say or what they should be saying is figure out what causes breakouts. Now, you can apply that to many things. Let's say if you're an SMA trader, you want to see what the SMA does or what the SMA is doing around the point of a breakout or a breakdown, right? If you're a MACD trader or an RSI trader, you want to see what it does every single time whenever it's about to break out. So that's what we're going to be doing today, or just briefly looking over, like, okay, what are the criterias that something like, NVIDIA as a stock has usually done very similarly time and time again to, cause a bigger breakout. So this is where the ribbons come in, where it just shows a very simple way to look at it. So SMAs, if you don't know what they really are, is just basically think of them simply as dynamic supports and resistances, right? So usually when you're up in a trend like this, you could see NVIDIA's up in a trend, right? The SMAs, the 10 and the 20, and even the 200, but the 200 is less reactive, they act as supports for the price as it keeps on trending upwards, right? So you could see here every single time that, the price has come down to 10 or it's breached to 10. Anytime it's come within this area, NVIDIA has bounced and continued upwards. Obviously, a trend eventually ends, but usually a trend, when it is strong, lasts for a decent amount of time. And you don't have to catch the bottom to be able to have a very successful trade. Now, you don't have to, this isn't only applied to swing trading, right? This applies to day trading as well, but we're going to just start off with this point. So we could see here that the fast SMA, which I don't know why I named it as that, but that's just a more reactive one, which in this case, we've set it to the 10 SMA. And the 20 SMA is a slow SMA, right? The 200 is even the slower one. That's less reactive, and that we'll talk about in just a second. But you can see here, like, okay, the 10 SMA, anytime the stock is coming here, early in the trend, it's been able to hold that. And anytime it even comes close to it, it's been very reactive, and it's been bouncing off of that. So whenever we start to see, very strong push to the upside, and we start seeing this ribbon start becoming green, and another key point is we also start seeing, like, hey, in this breakout, the 10 SMA, which is the light blue, and the pink SMA, which is the 20 SMA, they start widening out, right? So they get wider. So the reason why this is important to realize is because when you see these two SMAs getting farther apart, it means this trend is becoming stronger. Why is that? Well, let's just think like we don't know anything about SMAs. So we know that the 10 SMA is more reactive and the 20 SMA is less reactive compared to the 10. So that means if the more
I'm in danger.
Oh my god, is my stream still working?
Yep.
Okay, cool. All right. So if the more reactive SMA is very sticky towards the price, and the less reactive SMA, which is the 20 in this case, is still creeping upwards, but it's getting farther away, it means that the trend is so strong that it has a higher probability of continuing to the upside, right? So you could see, the farther and wider this ribbon gets, the bigger and more volatile the moves become. Now, the closer it gets, the less volatile it becomes, and eventually, when it starts expanding again, it becomes a lot more volatile. Volatile meaning the movements are bigger, right? So that's one thing we observed here. Well, okay, all right. We've observed that the SMAs crossing over and the ribbon turning green is indicating that it's going to be bullish. But how do I know this is going to repeat over and over again, right? That's easy. You got to look back and see, for in this scenario, when the ribbons have stayed green or stayed bullish and the trend has been bullish for an extended period of time. Jeez. So you can see here, I mean, this is a very small example, but you could kind of see the same thing, crossover of the SMAs. You see it bouncing off the 20 SMA, and you could see, okay, all right, anytime it came here to 10 and 20, it's kind of bounced off, but this doesn't really last long, right? So let's go back to when it's really where it was lasting a long time. So we got these two examples right over here. Now, an easy way to do this, and this is all sounds like common sense, but sometimes common sense needs to be spoken of for even the smartest people to realize that they need to be doing something that they aren't doing, right? So what we could do here is we'll just pull up a second window, and oh my god, let's go to NVIDIA again. Let's delete everything here, and let's pull up the same indicator, which again, I put the thing on. I don't know why I turned it back on when I already had it. So we're going to go back and we're going to just keep it where we're viewing the trend we were comparing it to, and then we'll view the two trends we're looking at. So the two trends we're looking at are this first one over here and the second one. So why are we looking at these? Well, obviously, if everybody knew that the second that the 10 and the 20 SMA crossed over is just a money maker, everybody again would just be sticking to the strategy. But of course, you could see, there's been chop throughout this, right? There's been times where the 10 and 20 have crossed over, but it's either very delayed reaction or it just does not continue into something, that lasts, right? And that's one thing that ties into why I stick mainly to price action. But I realized that explaining price action and the length I need to explain price action is going to be a lot harder to do. So that's going to come at a future time. So we're going to stick to SMAs for now. So we need to find what's similar to this trend compared to these two trends, right? So All right, we see that, we have the crossover, so that's one similarity. Second similarity is the ribbons, they're getting farther apart. Both occurrences, they get farther apart. Okay, what here is new, right? What else is giving it away that, okay, this is going to be a breakout? Let's see here. Okay, this breakout happened after a very volatile move to the downside. Is that the case for this? No, not at all, right? These two breakouts happened after a continuation of an upside rally. So, okay, what else is there, right? All right, well, this breakout happened when it broke above a previous high. Does any of these match the criteria? Well, yes, this breakout fits that criteria, but also by the time you can enter, it's already way past, right? Because there's earnings. So you could see there's similarities, but at the same time, it's not picture perfect each and every single time, which ties into another key point I want to drive in, where every single setup is not going to be the same, but it's going to follow a certain set of criterias in just different ways, right? So think of it like, I don't know, it's not really a puzzle, right? Because you need to put all the same pieces together to create the same puzzle piece. Maybe what you could think about it as is two puzzle pieces, right? In the end goal, you might have two different pictures, but they still end up being a complete set. And that's the way you need to approach trading, right? You're not going to have the same single thing each and every single time over and over again, but you can have very similar things with different little set pieces each and every single time. Again, what do I mean by that? Well, all right, these breakouts, this first breakout happened after it's been consolidating, right? It was consolidating, and then the SMA kept on crossing over and over again, and then finally it created an ascending triangle. It created higher lows, and it broke out. And then you could see it had a very solid candle to break out. So then what you could be thinking here is, okay, for an entry like this, maybe what I would want beforehand is where the SMAs are kind of, very choppy, where they're just crossing in and out over and over again. And then eventually there's a breakout. And then before that breakout, it starts smoothing out and the ribbon is appearing green, right? And it stays green. And even though it pinches in at one point, the breakout still causes it to be green. And now the SMAs are pointing upwards, followed by the higher lows. So now you're thinking, okay, all right, if I see something like this next time where I see consolidation and then it starts creating higher lows, and in additional to that, the SMAs are pointing upwards and the ribbon is starting to continue being green before a big movement, this is something I want to keep an eye on. This is a setup I might get into. And then, obviously we would indicate where the previous high was, and then you have the breakout here, whether you want to enter prematurely or after your confirmation. Again, that's up to you to decide. You then now have one indication of a strategy. Well, some people like waiting for confirmation. Some people don't like waiting, some people don't like entering prematurely or, just right at the breakout. They usually like waiting for retests. Well, okay, all right. Well, looking at this and looking at the previous examples, you still, if it's a very strong breakout or even a breakdown, it's just the opposite. Whenever it's breaking out, if these SMAs are becoming wider, whenever the price retraces to it or close to it, we still get a bounce and a reaction upwards. Now, of course, if you guys remember, this whole rally was insane, right? Not every single situation is going to be like this. This was caused by news, by the earnings, and we'll get into other examples as well. But it's really easy, if you actually think about it, to be able to make observations. Of course, it's going to be easier for me to talk about it because I know these things and I'm looking at something that's familiar to me. But the reason why it's familiar to me is because I take the time to make it familiar, and that's what you exactly have to do. And this is why I'm showing you this whole ribbon thing, because it's so brain dead, easy to understand, that if you at least start with something simple, you can create something greater with it, right? Whether you want to completely ditch this and use something else like price, volume, RSI, MACD, whatever it is, VWAP, at least studying with something simple can lead to bigger things. Now, tying back to the ribbon thing, it's a great strategy. Again, it's nothing that I invented. It's something that's commonly used, but it's just not always interpreted as a ribbon. I just think that a ribbon is a very easy way to understand it. So we see that breakouts, above previous highs, retracements are a valid strategy. You know, if you're really picky about your entries, maybe you could wait for it to come, you know, back into the between the ribbon to enter, and then that's your, you know, breakout. Or maybe let's say you're starting to see a little retracement, but it's not testing the SMAs and it starts printing a really great candle. There's another opportunity where you could do it, right? So this is something you could look at, right? Now, moving on from this breakout, we're going to move on to this one, and then we're going to move on to other stocks. So it's not just where I'm nitpicking a random stock. I mean, the most powerful stock out there, right? Let's look at this breakout, okay? What's similar to the previous breakout we're talking about? Well, you know, there was not too much consolidation, but we did have a retracement, and then we had a previous high that eventually broke out of. Now, this one's tricky because this breakout was caused by a very great earnings report that NVIDIA had. So, yeah, of course, you can absolutely enter here, but again, earnings is a gamble no matter how great the setup is. That ALHC trade that we had for earnings, it was a great trade. I only went according to the setup, and the only other thing I had was the fact that the option flow looked great, but I didn't know if it was going to beat earnings, right? I just went according to the setup, and it worked out. So anyway, okay, so that earnings, let's just say we didn't enter. So how do we enter, right? When's a good opportunity for us to enter? Well, you know, studying back at this trend and this trend, we realized that anytime there's a pullback or it comes close to the SMAs, we could look at potentially entering, right? So a great entry point would have been this candle right here. Even though it did not touch an SMA, we've also seen that anytime a trend has been strong, it doesn't always actually have to touch the SMAs. Sometimes when it comes close to it, it still reacts very violently. And you guys, if you've been here for previous live sessions or you are on the streams with me, you know that I always talk about when it comes to price action and reading candles, the most important part is not, in my opinion, is not really the bodies of the candle, but in fact, it is the wick, right? That is a terrible drawing, but you know what I'm circling. So when I see a wick like that, right, you know, first thing, and I know there's a lot of information, but first thing that comes into my mind is, oh, you know, the sellers were really strong that day. They were able to push the price down from all the way, you know, in this case, it's 112.57 all the way down to 107.02. But the buyers were strong enough to push them back all the way up to 109.91. And that means that in the beginning of the day, or at least, you know, during the day, the sellers were strong, but the buyers were even stronger to not let the sellers continue pushing it down. So that to me is an indication for me like, hey, all right, NVIDIA is interesting here. I got a nice wick to downside, and now it's also close to the SMA. Of course, it's still risky because it's not touching the SMA, but if I am a risk on kind of trader, I could take this as a call setup, and this worked out really well. Of course, everything's easier to spot out in hindsight, but I hate that saying because that's the only way you can learn, right? Of course, everything is easier to see in hindsight. That's how you learn, right? How do you learn history? You don't, you know, just live through the present. No, you live through the present and you also learn what happened in the past. Again, another entry point was right here when it came and almost wicked the 10 SMA. So you guys get the thing, right? And then you want to figure out, okay, you know, let's say we get a very volatile reaction and an upward trend, and let's say you entered into NVIDIA. Let's just say you got even the worst entry over here, right? Well, then the next question is, okay, when do I exit? Right? No one talks about that. When do I exit? When do I trim? Well, then look at what happens. You know, what causes a reversal? Okay, like again, since we're just talking about ribbons right now, see how far away the price has to be away from the ribbon for there to be a decent retracement that cuts away the trend, right? Obviously, you know, there's going to be small retracements here and there, like this red candle, but you don't want to get out of the trade right away, right? Because, you know, you could see it still follows through. You can't just be shaken out just by a single candle or by two candles, but you want to get out of the trade at a reasonable point, right? So there's another way, right? You would think, okay, all right, you know, Thinkorswim has this tool, you know, TradingView has these tools. There's just no excuse. You have to think, okay, let's measure, right? For this retracement right here, what happened? Well, if we take the measuring tool and we see how far away, you know, the price was, well, we could see that the price was 9% away from the SMA, right? That is a pretty huge amount. So obviously now we can infer like, okay, all right, if it's getting within the 8% to 9% range away from the SMA, that tells me two things. If I'm in a position, I should be considering trimming very heavily or exiting. Or number two, if the setup looks great, I maybe want to, sit on my hands because it's very far from the SMAs. And then one thing you guys might want to know about SMAs, they're very powerful tools, but price usually likes being close to them. Meaning, even though you have a trend that's very strong, if the stock is just continuing to the upside, eventually the stock needs to cool off. So it eventually will come back and retest the SMAs, or the SMAs will catch up to the price action. Meaning, the price, for example, right? The perfect example here is where, NVIDIA was very strong and it started getting very farther away, right? So let's see here. This was a one reversal, so we'll see how far away it was from the SMA. It was 13%. Obviously, that's pretty high, and I'm pretty sure anyone at that point would trim and exit. But you could see here, like, you could go more in detail and figure out what you want to see. We could see that this, the SMAs eventually caught up and it consolidated and broke out. Right, so that is one way you could do it, for example, with NVIDIA, and you could tie it in with these smaller breakouts and so on and so forth. So, and then we'll just go over this one, right? What was unique here that, was something important to look at for us to enter this NVIDIA trade? We all know that this whole thing was caused, one, because NVIDIA needed to cool off, and number two, Trump, Mr. Mango passion, I don't know why I made an accent there. Mango passion fruit, couldn't keep his mouth shut, and he pulled up his magic whiteboard that he, sleeps with, and then, the entire market collapsed for a brief amount of time. But we had one of the most historical rallies afterwards. Let's say you are a risk-adverse trader, and everything I'm saying right now is something you would have to pay hundreds of dollars for because everyone wants to gatekeep like a baby. Let's say you are scared and you did not want to enter any time here. You didn't want to catch the bottom. You want to wait for confirmation. Well, then here comes something special. What is different about this setup? What is here that was not present in the other setups before? Well, here, we had the ribbons, but one thing we didn't really have that was very interactive was a 200 simple moving average. The 200 simple moving average is a very, very important long-term moving average. Anybody who's in long term is primarily going to be looking at, especially if they're dealing with millions of dollars, at the 200 simple moving average. They usually look at the daily simple moving average, but in this case, this indicator adjusts to whichever time frame you're looking at. But the 200 is very important. It is a very delayed indicator, meaning you cannot use it every single time and every single day, but it helps act as a very strong dynamic support. And it shows when positions are undervalued, overvalued, and so on and so forth, right? So just similar how we did like this measuring tool and we see how far away it was, you do the same thing here. You can see, okay, how far away is it from the 200 simple moving average. But anyway, the main difference is the fact that throughout these breakouts, the 200 simple moving average was below the ribbon, right? But in this case, we could see that the 200 simple moving average was above, for this period of time. So we could have used the 200 simple moving average as another indication of when a possible good entry is, right? Let's say we didn't enter into any of these days. We have two easy entries we could have had. One was this day candle right here. It could have been a day trade where we saw that NVIDIA gapped up and was opening and bounced off the 200 simple moving average on the daily, and we could have entered off of there. But let's say we didn't do that. Let's say you're a swing trader. You could have just entered right off of this candle itself, right? Near close, you could have just entered calls. But, maybe that's not the right thing to do because you already have a very strong move, and after a very strong move, FOMO happens and a lot of people get screwed over. So let's say we don't want to just chase. Well, then the perfect setup would have been right here. Well, why is this the perfect setup? Two things. One, you have the ribbon that's expanding and price retracing back into the ribbon and testing the 10 SMA. Now, you don't get a beautiful candle, and that's the risk you just have to take if you're doing a strategy like this. No matter what, there's no strategy where you cannot imply or apply risk. There has to be risk. If you don't have risk, you're not going to find substantial rewards. There's no such thing as a guaranteed strategy or anything like that. So there needs to be time where you take risk, but that doesn't mean you take dumb risk. You can take smart risk, right? And that's a great thing where you have a strategy where you observe and you study, you know where to take smart risk. Where this, I wouldn't consider it stupid risk, but it's definitely risky, versus an entry like this has risk, but has logical risk, where you're still in an area where it's safe, where you still have a probability for this trade working out for you. Meaning if even, it didn't gap up, you still could have, had it come down or come down here, and this 200 simple moving average and the 20 simple moving average could have been a very strong dynamic support for you, right? Or anywhere between in this ribbon. So, retracement here, right? It came between this simple moving averages, and then the other important part is the fact that now the price is above the 200 simple moving average. Why is that important? Well, that means now if price were to retrace back to 200 simple moving average, there's a higher probability it will bounce off of that and continue up to the upside. So that already tells you and other traders and the collective mind that there is a higher probability that the trend is going to continue into the upside. So why the hell would anybody short, right? Majority of people are going to be long. Of course, in a day with computers, there's computers and stuff like that, but you got to forget about that. You have to the way you succeed is thinking what the collective mind is looking at. If you're not thinking about the collective mind, you are going to be left behind. And I just spit out bars right there. But you have to think, okay, what is the collective looking at? It's not about what I'm feeling. It's not anything about that. It's what is the collective mind? And if the collective mind, which is not you, not Tom, not Ben, not Gary, it's not the people who live at their homes, but instead the people who manage millions or billions of dollars, they're using SMAs or they're using RSI, right? So if certain indications are filled, right, or it matches their criteria, they're not gonna just like, oh, I'm gonna wait for this. No, it's there, they're gonna follow it. Same thing you have to do here. If it's not gonna always work. It works majority of times, but if the price is above the 200 simple moving average and it's crossed over on the daily, then there's a huge probability, if the trend was already strong beforehand, that it's going to continue on to the upside. So this was one very strong entry you could have had. The argument for this is the fact that, earnings was coming up, so you didn't want to play it. That's fine. I understand. But then there's so many times and so many periods where NVIDIA came and tested the simple moving ribbon over and over again, twice, 3 times, 4 times, and you could have entered and you could have caught this entire rally to the upside, right? So that's how you could see it on NVIDIA. I'm going to go over like 2 more stocks, and then I'm going to go over levels, and then that's, I think you guys can ask your questions, and then we'll kind of wrap it up there. I think I've been going on, no, actually, I have to talk about day trading. So no, this is not just about, I'm just showing you how you could start off, because you always want to start off looking at, swing concepts, because I'm telling you, this is my opinion, but it's a very strong opinion. If you understand how to swing, day trading is the easiest thing you can do out there. Swing trading is the hardest thing to do. Day trading is but easy. Anybody could day trade. That's why everybody day trades. If you can understand swing trading, though, you're I wouldn't say you're set, but in my very strong opinion, you could possibly be set. So that's why you always want to start with the harder part, which is understanding the bigger time frames, because if you get and understand the bigger time frames, you can easily apply it to the smaller time frames, because then you're already attached to figuring out and seeing what's happening on the bigger time frames. So you're not going to be stuck trading something that's just irrelevant, right? If the trend is bullish and it's bullish because you looked at the daily or a bigger time frame, you're not going to be always looking for puts. You're going to be looking for calls then. All right, that's a good trading habit. Again, everyone's different, but that's just how it is. Anyway, back to what I was saying. So I need to talk about how to apply it to day trading. It's very simple. It's nothing rocket science. Okay, let's go to AVGO, for example, right? You could see we had the breakout here. What are some similarities we saw with NVIDIA that we went over? We went over 3 setups where the ribbon crossed over, right? What are the similarities here? Well, let's say we didn't enter over here. What's the similarity? The 200 simple moving average. Not only did we have the ribbon, right, expanding and acting as dynamic support across the whole way, but if we were to ignore all of this and just move back all the way over here, our big indication is the fact that the price was able to break above this 200 simple moving average. And you could go to any important stock and almost any stock, and you could see how the 200 simple moving average on the daily reacts with price. There's always going to be a reaction. Look at this. Like, that's why it's one of the most commonly used long-term investing indicators out there, other else than MACD and RSI, because it is the most important dynamic support for long-term investing. And long-term investing is more important than swing trading and day trading because that's what runs the markets, not small time, time frame trades, right? So anyway, so our indication was it's above the 200 simple moving average, and then we get a retracement close or at the ribbon, right? And you could have entered into calls. You could even wait for better candles, right? If you're like me and you don't like entering right off of ugly looking candles, but just because it bounced off of the simple moving average, you could wait for a better candle. And this is where we entered AVGO, which went for 3,400%. This right here. This is the type of setups, if you're really like getting used to things and you're not just entering based off of a bounce, these are the kind of setups you want to look at. This is perfection because you have so many things tying into this. One, you have the ribbon squeezing in and it's consolidating and it's going to potentially squeeze. And then two, you have a pennant, right? If you go to a smaller time frame, you could see this pennant on here. I'll go to 1 hour, you could see the pennant, right? So what makes this perfect? Well, you're not just going based off of the ribbon, right? You're going based off of the ribbon, a pattern, and also a beautiful daily candle. And that's what creates explosive plays. So if you start with the basics, even the last thing you need to think is you know what you're doing. I even tell myself that I don't know what I'm doing. Quite frankly, I'm quite retarded. So maybe that applies to me more than most people here. But even if you know what you're doing, you should still always make sure you're doing the right thing. That doesn't mean you become hesitant in your trades, but that just means after trading period's over or before a trade happens, you want to think, is this what I'm looking for? Is this match my criteria? If it doesn't match my criteria, is this something that's repeated in the past, right? So when you get a setup like this, that AVGO trade was so ballistically beautiful that it set me up for the month of, I think it set me up for 2 months. It was just a pretty huge trade. So you could see how, you tie these things together, it's just great. And here's the thing. When you are able to understand a simple basic thing, you start venturing out before you even try to do it. What I mean by that is, the important thing is understanding a strategy, right? Sure, you could say that. A lot of people say like, oh, you need to understand the psychology of trading. You need to read psychology books, and I have tidy whities, and okay, fine. If that's you, I completely understand, and maybe I'm mean for saying that, but I don't believe in psychology books when it comes to trading. The truth is, you can learn a lot about yourself and about the way you trade by just being completely blunt with yourself. If you did something idiotic, that's just idiotic. Don't give yourself excuses. Oh, I did this, but it's okay. No. You're stupid for doing that. But that means when you do something good, you should be able to tell yourself, hey, I did something right. What did I do right that I can make sure I repeat in the future, right? So, for example, if I took this trade over here, which I did, what did I do right? Well, I waited for consolidation. I didn't just enter off the bounces, and I waited for a really great daily candle after a pennant. And it was followed by staying and remaining above the ribbons, and that caused a very explosive play on AVGO. So, you want to always think about these things and just tie it back in over and over again, and that's what really helps you out. And then once you start understanding your strategy, then you can start exploring other stocks, right? Then you don't have to just trade QQQ, SPY, or NVDA or AVGO. You can start trading, Meta. You can start trading Netflix, Cisco, Palantir, Hood. All of these things follow the same thing. There's no stock that beats price action and the way technicals work. It's just what you look at, when you look at it, and how you interpret it. And All of that is circumstantial, but one thing you can always control is what you and how much you prepare beforehand. Hood is a perfect example of how the ribbon or the 10 and the 20 SMAs on the daily are so strong when it comes to parabolic or very trending stocks. Look at this. Need I say more? Hood was one of the easiest stocks to trade in the past 2 years. The dumbest people have made money off of the stock, and if you didn't, it's fine. It's nothing like as if there's a one lifetime opportunity. I don't believe in that. Opportunities present themselves over and over again, right? So, okay, if you didn't catch Hood, where else was where else was this happening? Oh, Roblox, right? Roblox did this. AVGO did it. What's another stock? Microsoft did it. Google did it. Well, Google was a little ugly, but Google did it. And then, no one talked about the stock, but Chewy did it too. Look at Chewy. Look at this little dog stock. I don't know how my dog recognizes when I say Chewy. It's like as if he knows I'm buying him something. But so like these things, they repeat over and over again, right? The stuff we saw, let's say for NVDA, in just the strategy, the ribbon strategy, we see it repeating over and over again, right? So you don't have to follow this. You don't have to follow the ribbon, right? You don't have to do that. If you follow RSI, go ahead, follow it, but find what occurs over and over again, right? Whether it's price divergence or something else, right? VWAP. A lot of people try to use VWAP. Okay, what happens? VWAP is more of a day trading indicator. What happens when price gets to that? What happens when price is too far away from that, right? There's so many things you could be asking yourself to break away from spending so much money on bullshit courses and discords. I don't advocate for discords. I don't, because the majority of them are not good enough. Some are good. I won't tell which ones are good and which ones are bad. But if the ones that are not providing education are not providing you education, you might be in the wrong place. So if you're spending money, that's fine. Everything is an investment, but make sure you're in the right place. So you can grow and you could do whatever you're doing. Anyway, I went on a tilt there. I have no idea why. What's the thing I had to talk about? So how to apply this to day trading, right? I'm only talking about this strategy itself. I'm not talking about price or anything like that, but you could take what I'm talking about, this strategy, and apply it to anything else. So day trading, let's go back to, let's go to NVIDIA, for example, right? So let's say we've already mastered, being able to identify the trend and using the ribbons to our advantage on the daily time frame. Well, now we know we can distinguish when the trends are happening and what's exactly going on. So we can, and if you guys can please refrain from mentioning any server names. If you guys mention it, please delete it for the respect of the server owners that you guys come from and the servers you come from. How can you use this, right? You could see if you go to a smaller time frame, right? And you, sorry, I had to just delete a comment. If you look at it, for example, a 30-minute, you could still see the same things happening, but just at a smaller scale, right? You could see that the ribbons do expand. You do have volatile moves up, and you have like the 200 SMA that comes in, and you break above. Okay, you break above the 200 SMA on the 30-minute. I could start looking for calls, right? Okay, what am I looking here for calls? Well, let's say the ribbon is expanded, it retraces to it, we're in a strong trend, yada yada yada. Same things you can apply here. It's actually much easier to see on the 5-minute. And on the 5-minute, it's really great for reversal trends, as you can see right here. Now, obviously, the day was cut short, but you can easily spot when days where it's very trendy, SMAs are always going to be your friend, right? And you could see here that NVIDIA, and I'll even pull up QQQ and SPY, because that's what people dominantly trade, even though I don't agree with it, but that's fine. If it's working for you, absolutely. You could see it's just been following that down, right? SMAs are not great in chop. They're not. But then you have to ask yourself, why are you trading in chop, right? So I don't know where I was going with that, but that's the end of that sentence. So anyway, you could see on trending days, the SMAs are really great tools to use. You could say that with almost any indicator, but I'm just saying that because this is an indicator that is commonly used among the big guys. So one very important strategy that you can use is spotting out consolidations on an intraday time frame. You could apply this to swing trading as well, but it's easier to spot it on intraday because it happens a lot more intraday versus, overnights and, swing time frames. So consolidation is nothing intricate. Just think of it as a box, right? Think of Roddy Rich, right? He loves his boxes. So anywhere you could just draw a box and you have a lot of candles in it, that's your consolidation. Here's your consolidation. Here's consolidation number 1, right? How do we use a consolidation to our advantage, right? Most of the times, consolidation actually breaches to the upside, but that doesn't mean it happens all the time, right? There has to be certain criterias. The easiest one to spot is just making sure that it creates higher lows, and even when it does that, it still causes fake outs, as you can see here. Someone's trying to get in over here, they would have been royally screwed, right? So it's not always going to be perfect, but this is when you tie in levels, right? This is when you could tie in volume. I don't know why my volume is so small. Everything in my life is so small. Right? There's so many things you could tie in here, and right. So what's a good way you can use this? Well, consolidation is very easy to, uh, really easy to look at because you can use the ribbons to your advantage. So you could start seeing like, okay, if I don't want to enter too early, even though this would have looked like a very valid entry, maybe you could be thinking to yourself, okay, it just created one, or you could say 3 higher lows. Maybe I want a little bit more, right? So you wait for a 4th higher low, and then you start seeing that the ribbons start expanding and the ribbons start continuing, right? And this would have been like, okay, let's say this wasn't the end of the market close, right? You could have gotten into this, and this would have been a great trade. If you go back to the recent trades we've done, a lot of them have been followed by consolidation breakouts. Some great examples. Tesla. You guys know how great I am with Tesla. Tesla is one of the hardest stocks to trade. But I will tell you something. The thing that Tesla does that I don't know why anybody doesn't realize is the reason why it is such a beautiful but a deadly stock to trade intraday is because it is so volatile, and at the same time, it is the easiest contract killing stock out there. What do I mean by that? When the trends are trending, it is trending, my friend. It is strong. But when it consolidates, oh my God, there's like 20 million bajillion candles in a box that lasts forever, right? But that's the key to Tesla, is the fact that it consolidates so that whatever trend follows, right? It's pretty big. That's why the moves are so huge on Tesla, which is why it is one of my most successful stocks, because the trades I get are so huge, right? And that's why my average percentage for trade, I'm not talking about my win rate, my average percentage per trade on Tesla is so huge compared to any other stock because it is so unique. And that doesn't mean Tesla's the only stock that does this. It's just a stock I like trading because I like saying that I can do something better than other people struggle to do. Anyway, that's just me being a dick. But, Tesla's an easy stock to find boxes or consolidation on, right? But it's very hard to figure out where the breakouts are. Well, that's where you tie in many different things, right? Let me just delete everything right here. Let's say you have this box right here, right? You have this consolidation right here. You're trying to figure out, okay, when do I enter? Well, you've been creating higher lows, stuff like that. You're creating an ascending triangle. So you got a consolidation, you got an ascending triangle. Now you're thinking, okay, well, I could take, weekly contracts, but what if it consolidates or just continues to chop? I'm just going to get killed. Well, this is when I can't answer that for you. I can't hold your hand. This is when you have to hold your own hand, right? This is when you have to make sure you tie back to what you can risk, what you can afford to risk, what you want to risk, and so on and so forth, right? If you're using RSI, if you're using MACD, you're using the VWAP, you want to see if it follows certain criteria. What are these criteria that, that fit here on Tesla? That is unique to this breakout and not, not repetitive across the breakouts beforehand. But right, because that's very important. Because if we just find something here that could be repeated back over here, then that's not doing us anything, because we would have been stuck in the chop, right? So the unique thing here, just looking at this very quickly, is the fact that, one, this was market open, and right off of market open, it was very quickly. But I remember this day because I caught this. It came down very quickly, and it bounced off the 200 simple moving average on the 5-minute and it had a huge candle. And that huge candle, I don't know, you could see here was followed by gigantic volume. Well, actually, no, it wasn't. It wasn't followed by gigantic volume, but it was pretty big volume, right? So that itself, what could have been could have been a giveaway, right? Because usually, when do most of the trends or breakouts happen? They usually happen in the morning, the first hour or 2 hours, right? So that was one indication. That's unique compared to the other times when the price has been above the 200 SMA. It was never really during open, and when it was during open, it didn't really hold it as strongly as it did here. So those little things can tie up to a really solid strategy that you can use yourself. So, you could use this intraday for anything, right? You could find a box. You could even find it for breakdowns. Because, as I said before, consolidations are usually best to find, for breakouts versus breakdowns. But it's very simple. Just, it's so simple to make strategies yourself. You don't have to follow anybody. You don't have to follow me or anybody. Just look at what's there. Just start by doing the simple things first, and before you know, your eyes will catch on to more complicated things. And when that happens, you're gonna, without even knowing, challenge yourself to figure out why it happened that way, right? And I just personally think the ribbons or just SMAs in general are a great way to start in getting this your mind to figure out what's going on. If you guys knew, not knew, if you guys were in this, we were in the Tesla calls from yesterday, and I was very confident about this. I knew exactly what Tesla would happen today because I've studied. Sorry, my dog is kicking me. I've studied Tesla so much before, right? I know exactly what's going to happen. So when I saw a breakout like this, I knew, especially after a daily candle, like what it printed yesterday, I knew there's going to be continuation. Even though there was downside today, other trades, if it's down like 30%, I would consider cutting it. But this trade, I decided to average down. Technically, I added newer and closer contracts, but it's the same thing, right? And the reason is because I've waited for criteria to happen, right? I waited to reach a level that I was looking at, which was this 316.29 level. Not only was it there, but I thought to myself, okay, if I add over here, I still have the 200 simple moving average that is tying up, or following up on this. And even though the ribbon is red, if it were to bounce off, right, eventually it would start turning green. And if it were to bounce off this very important level, or even to the 200 SMA, it would be a very volatile move to the upside. So using that, I was able to confidently average down. And you guys know the contracts that we got, the second entry, ended up being like 60% or 50%, I forgot. And then the original contracts were above break even. So there's so many ways you can use this, and interpreting and observing is one of the biggest skills you can ever use, right? And the same, it doesn't have to be for indicators. You could do the same thing for levels and trend lines. What levels cause big reactions, right? Is it off of previous highs? Is it off of previous lows, right? Is it levels that are caused by breakouts and then there's a rejection, right? So what I mean is, if like this level right here, is this an important level, right? If there's a breakout and then there's a rejection, a sharp rejection, is that going to be an important level, right? So these are things you want to look at. And here's the thing. Each and every single thing is different. Each and every single stock has a characteristic, as gay as that sounds. That's just a fact, right? Think of these guys as little babies that just rummage around your room, and you just have to be able to pick them up at the right time so they don't just pee all over you, right? And then the satisfaction you get from holding them, I don't know where I'm going with this, but you have to be able to figure out what each and every single stock reacts throughout the day, because then you'll be able to figure out your entry points for each and every single stock, right? For SPY, for example, right, you could still use SMAs, right? You could see, if I go to the daily, look at this. Everything follows the simple moving averages. Everything. But anyway, I think I covered what I wanted to. I don't know why Discord was acting up earlier. It's kind of stupid that it was. But what questions do you guys have? Because I will answer them to the best of my ability without giving out financial advice, because I do not give financial advice because I'm not a financial advisor. So you guys can ask me whatever you want in either of those chats. I'll just read it. And so on. So I'm going to read the questions you guys had beforehand. Let's see. Yeah, I think I might have misspoke. No, SMAs and EMAs are not the same. We have, let me pull it up. Hold on. Sorry, let me bring up the window. Oh, sorry. No, I didn't mean to show the beautiful, amazing Russell Wilson quarterback. But what you can do is, if you go onto YouTube, and we actually posted all our YouTube recordings. If you go to this YouTube, and I'll post a link, it's also in our links tab. If you go to our videos, you'll see that we have all of our previous recordings on here, whether it's me, or whether it's Tom, or whether it's JP, right, or even Randy. You could see all these, and we've actually gone over moving averages. There's another actually recording that I need to upload about moving averages, and JP talks in both of those videos because he uses moving averages a lot. So great videos to watch, and there's other topics on there. So definitely go check that out, and that will give you a better answer than what I could possibly give you to that question. I personally, there's not one that's best to use. They have their own special use, but I personally like using simple moving averages. That's just me. That's a personal preference. Yeah. So okay. So let me do this again for those who didn't. So I'm actually. You would think I'm a nerd, but I'm actually not. I'm actually I want to do a lot more with this. I like learning new things. And I actually, if you see here, I was trying to add more things to this indicator. I had some issues, but if I actually code something new, I would definitely put it out and you guys can see it. But so I'll show you again. If you go to since you're in the live session server, if you go to the resources tab, you copy all of this. All right. I'll show you what to do. I'll just show you. All right. So you go to TradingView. Let's just whoops. Let's act like we never had this. All right. Okay. Create new indicator. So you'll be on like a screen like this. If you don't see a screen like this, press Pine Editor on the bottom. Click on the arrow, press create new, and then press indicator, and you'll pull up this screen. You delete all of it. You easily delete it by clicking onto the box, right, and pressing Control, just CTRL, and an A, which selects everything, and you press backspace. After that, you could copy and paste. You could paste in the code. Again, it's nothing intricate, right? I didn't make anything special. It's just nice and easy, and I just gave a few options on there, and then you paste it in, right? And then you could press Control S, which will save it, and it'll ask you what you want to name it as. If you don't want my hideous name of Bishop on there, you can name it whatever you want, right? Once you press Save, it will save. You can minimize this, and then if you go to Indicators, if you press Personal, you will see the indicator that you typed, that you put it on there. I wish I could share it with you. I can, but I also hate TradingView, so I don't want to give them more money to be able to publish this indicator, because I feel like they're just the biggest, not the biggest, but they just scam a lot of money. I just feel like they're overcharged. But I do have to give props to them for giving out constant sales. So that's a whole nother rant that I'm not going to talk about. Oh, let me see. Hold on. Let me see if I can actually publish this, because I remember you had to. You had to be able to. Really? See, it's all a learning experience. You know what I mean? All right, public, private. We'll do public. No way. Are you serious? What am I supposed to do here? I don't know, bands and channels. Moving average. Oh, there we go. Moving average. Bear with me. All right, we'll just choose those. That's crazy. Okay. Let me, I guess I gotta freaking.
Oh, right, I got paid my dividend. That was exciting.
I don't know how to spell restaurant. Uh. Oh, that's sick. I could actually publish this. Okay, so never mind. You guys don't have to do anything. I'm just retarded. Let me share this. How do I share this? Okay, cool. So, tell me this. If I... Alright, so if you guys... If you click on this thing, does that actually add the indicator to your thing? Because it should. And if that's the case... Oh, you're right. Alright, cool. So, if you guys click on it, you should be able to get it. Is that the case? Are you guys able to... It's posted in... I'll just post in all the chats. I'll just post it here. Post it here as well. Can someone just tell me if that works? Oh, sick, it works. Okay, cool. Wait, does it? Okay. Anyway, let me get to the other questions. How do you make TradingView background black like yours? Uh, you have to go to Canvas, press solid, and I use the second black color. And there you go. I just removed the you know what? Let me just do this. I don't know why I didn't think this. Let me just share you my whole layout. There you go. All right, post it in main chat. All right, let me go over the other questions. Where do you start looking in the first place? Oh, so yes, this is another important thing. So this is why what we talked about is very important. When you're able to understand your strategy and understand what you're looking at, you automatically figure out what your criteria are going to be. And that comes the biggest next step, which is being able to build your own scanner or using a scanner that's already built very effectively. The reason why scanners are important is as you become consistent with your trading, God willing you do, you have to be efficient with your entries and be able to find things that you primarily aren't seeing, right? So at that time when you're consistent, you don't want to be just trading one thing, right? You want to have a whole watch list. And obviously you might not have the time to test, check the whole watch list, every single minute. So that's where a scanner comes in, because if it fits your criteria, like let's say, I'm just throwing this out there, don't just go blindly do this. But if you build a scanner that just gives you stocks that are above the 200 simple moving average on the daily and just created a 10 SMA crossover the 20, then it'll populate all those stocks. And let's say you then narrow it down to the stocks that are above a certain market cap, so you don't get penny stocks. There's like so many things you could do. But the reason why that's great is because you can find stocks that you either don't have on your watch list or find stocks you could have probably missed, right? So scanners are very important and screeners are very important. But that's something you just can't jump into, because here's the fault in that. A lot of people buy scanners or they build own scanners, but if they don't know what they're looking for, or if they don't know what that scanner is looking for, you're going to get into a lot of I wouldn't say you would get into a lot of bad trades, right? Because you need to weed out what you're seeing. A scanner is not going to give you 100% everything that's perfect, right? A scanner, for example, will give you a list of 20 stocks, and out of those 20 stocks, only 3 might actually be good. So that's where you come in, where you have to be able to know what you're looking for. So that's why the first step is what I actually talked about today. And then when you know that, that's when you could build your own scanners. Now I'm going to actually I had scanners that I built out myself over the years that were, I kid you not, phenomenal. But here's the thing. I am also a big idiot, so I might have accidentally deleted all of them, and they might have been worth probably like thousands of dollars worth of information and scanners that I built that I all just threw away because I ended up forgetting my stem root of being an Indian, and I forgot what tech is, and I don't know how I deleted it till this day, but they're gone. So I need to remake them again because they deal with coding and stuff like that. So I could recode those, and then I could publish them again on the server, and then you guys could be able to access it. But the scanners or screeners are not good to use, in my opinion, until you know what you're looking for. If you know what you're looking for, that's when you could do great with scanners. But to answer your question, where do you start looking at in the first place? Well, in this server, if you don't already have a watch list, I've posted multiple watch lists, and I have like 100 watch lists that I've posted over on Twitter. By the way, you should follow our Twitter, both JP's and I's, and then our YouTube as well. But you have our watch list here, so you could see like JP has like an S&P tactical watch list. His most traded watch list. I have the same thing. This watch list over here took like 6 hours to make, so that's something you could look at. And then you have the most traded watches of mine, and then you can have these stocks, and then you keep on adding to it over and over again as time goes on. So that's where you start, right? And then you have this watch list of yours. It doesn't have to be my watch list. It could just be literally start with the watch list of just the stocks you know. It could be NVIDIA, Palantir, Hood, Tesla, Meta, Microsoft, Google. Like think of a company, and there's probably a stock behind it, right? So yeah. I don't know what that weird noise is. All right. Yeah, I have no idea. Anyway, yeah. So if you start doing that, that also leads to being able to read scanners very well because you know a lot of the stocks you see. So yeah, like whenever I search for setup, the stock is already lifted off, not every time, but often. Well, that's when, as I was saying, that's when you have to be able to. You have to understand what you're looking for, and then you won't always be in that scenario where things will lift off, because that's when you can use a scanner where it can catch what you're trying to look for at a very early stage, right? Another simple way of doing this is if out of 20 stocks you know how to trade 4 stocks really well, just stick to those 4 stocks. Whether it's ETFs or stocks, just keep an eye on them, and when they match your criteria, just go ahead with it. But one of the biggest things about trading is you just have to be okay with things just moving without you. And if it's something that's constant, like where you're saying, what is that noise? If it's something that you're saying where you're just like missing out on it, right? That's when you have to figure out, okay, is this a personal issue where I am waiting too much for confirmation? Because that is a thing. Because waiting too much for confirmation is a very people have the misconception that waiting for confirmation too much is a good thing, but it's not. You need to have a limitation. Because if you wait for too much confirmation, it's just a wussy way of telling yourself that you're hesitating in your trades. And that's not good. Because when you hesitate, you either get in too late or you get into very not confident setups, right? So these are things I wish I could give you an answer straight up, but either it has to be dealt with individually, and I don't do one-on-ones anymore. But it needs to be something that you need to deal with yourself in terms of asking these questions, and then just looking at stocks, right, and just seeing, okay, before it breaks out, just like what we talked about, right? What causes the breakout? And if you start seeing those things, then the truth is you have to be experimental, whether it be with paper money or with your own money. You have to take the risk of actually entering in when you see those first signals and then being able to see that. So yeah, that's one way. Could you explain how to use the bands with scalping? It's just a few strategies I recommend. I guess I don't want to go too into this because we have videos and that's a whole different thing, right? Because scalping is a whole strategy itself. But you could use, if there's a trend, right, or something like that, you could use the SMAs, like the 10 SMA, as a very dynamic support. So if you see price come down to it and it touches it, maybe you might want to scalp calls off of it, right? And you know, if it ties in with a level as well, that's a perfect place to take calls, right? So that's an example. I can't really give you a full blown out strategy because my eyes are also shutting down on me. Bishop, yeah, I already answered that. Okay. How do you check volume on a candle? Volume.
What?
Okay. So how do you check? So there is multiple indicators. There's of course there's regular volume which pops up over here, but there is a personal volume I like, which I'm gonna code myself and make a better version of, called Market Smith volumes. Only which you guys, if you press the setup chart I did, you already got it pulled up. It just shows you a volume per candle. Nothing new. It just gives a little bit more information that I like. You know, seeing how much above percentage-wise is it above the average SMA for the volume. All right, so all those stats if you're a volume trader. But this is how you pull it up, and you could see for each and single candles where it shows the volume per candle. If you're trying to do it per price, that's where VRVP comes in. That we have a video for that, so I don't want to explain too much about that. But that's how you see the volume per candle. I think that's what you're trying to ask me. Let me know if it's not.
My God.
All right. Is there a place where I could rewatch the stream? Yeah, so I also suck at posting the videos, but I do post them eventually. I'm recording this. Hopefully the recording is not corrupted. If it is not, the easiest place you can find it, right? In fact, if you don't want to wait for me to post it, is you go onto Twitter and you search up this guy, the Market Bishop, and before you search up my name, make sure you follow this lonely guy, the Agent
You had
Trades.
handsome trouble.
So
You had handsome trouble.
if you search this up, if you search up my profile here, right, you'll see this recording. Once this live ends, it's live right now. So once this ends, it will actually be posted as a recording. So you can watch it raw if you like, but it's a little bit hard to navigate through it. But it's still there. So if you want to use it, go ahead and use it. I know my voice is pretty boring and monotone, so you can use it as a way to fall asleep. There is that. Okay. No, the channel unfortunately is not How to Men. I wish that was their channel name. I am going to be renaming this channel though. It's not going to be what it is now. It's going to be called Live Sessions. But again, I posted the YouTube link in main chat. So that's where it is. I'll post in main chat. It's also in links. It's in announcements. If you guys scroll up on all these channels like resources, links, live recordings, announcements, all these stuff, you'll see all the links for everything I'm talking about. Even if it was acting up, we could still see.
Wow.
I don't understand this question, Bear Money. If you can just explain it. How low time frame do you go to see pattern? I personally just go as low as the 5 minute. Very rarely I use the 2 minute or 3 minute. 1 minute is very valid if you're using it for a certain strategy, like scalping or day trading. But I find it perfectly fine using the 5 minute. If a very easy way to day trade, by the way, if your person waits for confirmation, is just using the 30 minute, in my opinion. So if you could figure out to use that, you know, that's a pretty solid day trading time frame. That does mean though that you don't really go off, you know, you don't really trade the first 2 hours because those setups kind of set up a little bit later on in the day. That's something interesting if you want to look into it. Do you also look at long-term period? Wait, what? Do you also look at the long-term trend prior to entering? Yes. So, for example, if I'm trading Tesla, right? If I see it's in this pennant, you know, why I would only want to be taking calls because it's one, it's at the bottom of the pennant, and two, it looks like it's going to break out more than break down. So that's how I use like, okay, all right, think about it. What is the bigger time frame? The bigger time frame is nothing but just showing overnight moves and showing the intraday moves. So if the intraday move, if the trend is bullish, that obviously means the probability of it continuing to be bullish is higher, right? So that means where the bigger trade's going to be. Obviously, if the trend is one way, it's going to be the trend. So that's where day trading, you could catch. Why do you think my day trades on just regular stocks, not even zero DTEs, are some of the biggest trades? Because I go with the trend, right? So if you see it on a larger time frame, whether it's a daily, weekly, 4 hour, 1 hour, if those are setting up with what you're looking at, then you can actually catch a bigger trade, which is what you would I think is what I would want to do. So I get a higher probability, higher long lasting trade, which allows me to hold runners, which by the way, runners are one of the most important things to grow your account. So yeah. What's that? You're looking with SPY. I see some trend lines you drew at the end of the day. Did I? I drew some trend lines?
I think he was talking about me.
No. Actually, I know I was drawing this. I was I was talking, well, I was thinking to myself where I was talking to someone and I was saying how SPY either breaks out here, right? Which I don't think it will, but instead of like people who are fearful that's going to completely break down, I don't think it's going to break down. I was just guessing to myself that it's just probably going to like consolidate to the downside and break above.
It's a giant bull flag.
Yeah, and then an easy way to see what I'm talking about is what NVIDIA did right over here, right? So something similar to this or this. That's exactly what those channels were. So I was just trying to predict it so I could look really smart and then post it afterwards and say, look, I predicted this on August 7th. Buy my course. That's the whole concept behind that. You know what I mean? What books do I recommend? Let
The
me
Bible.
post. I posted before. Let me post it. The Bible, Quran, they're all great books too. There's some books I uniquely posted in the resources channel, but I'll post these books as well. I thought I did, maybe I didn't, I don't know. I'll post it in the links channel actually. So here are some books that I personally loved or liked that I think are really great to read. And even if you don't learn something from them, even if you, out of the 100 pages in the book, 98 pages you already know, those 2 pages you don't know could probably be some pretty big things, right? So if you are a reader, these are some books I personally like. A book I would say that everyone, no, let me take that back. A book I would say I would love reading for any simpler beginner. My English is gone. This book right over here, The Elliott Waves Made Simple, is a really cheap, great book to read because that Elliott Waves is nothing more than just figuring out what the trend is and being able to identify a trend and being able to see patterns in trend. So I would say if I were to start off with any book that is so simple to read, it's that book. And then you can move on to other books. Laws of Trading, Studies in Trading by Richard Wyckoff, which is I don't really have role models when it comes to trading, but I would say he is a person that I really respect in the way he trades, or he used to trade because he's dead. All right,
Dead.
yeah. All right, let's see.
Because he died?
Yeah. Let's see. Any topics or parts of trading you were levels. I mean, that's all scalping is, levels, right? So learning how to draw proper levels. We have a video about that. Or if you already know how to draw levels, just, you know, watch this video. Rethinking levels and trend lines. I spoke in that video. All right, let's see. How do you decide on your expiration of a trade? Very good question. I'm not going to answer that right now because I did make a video on that.
We got a lot of videos.
That is very true. We do have a lot of videos. Where is it?
Boy.
Oh, God.
Oh boy.
We do have a lot of videos. Oh, picking the right option. Here we go. This video should be able to answer your question. If not, we'll have a live session on it.
All right, Kevin, it's 9 o'clock and I need to call it a night.
Yeah, for sure. I'm about to wrap it up soon, too. Thanks for coming on, JP.
What's the volume indicator you use, JP, to write a book? JP, what? What's the volume indicator that I use? I just use the regular volume and then I use volume profile. I have a custom MACD that I use and I use regular RSI, but I use a combination of EMAs on multiple time frames, and then I have static SMAs for daily levels.
By the way, Chipper, good stuff.
That's for
Go on.
Argok.
By the way, Chipper, good
Is that
stuff.
Verizon?
I know I've always...
What?
I'm speaking to a guy who asked me a question, all right? Oh my God.
Oh,
This guy needs hearing aids. I should get my grandma's hearing aids for JP.
oh, it's Lucas. What's up, Lucas?
Um, Chipper, since you've been here in previous live sessions, I've always talked about how you should always start with one stock and try to expand, right? So you know how to trade one stock, and then you know how trade two stocks, and you keep on going on and on. So it's pretty cool to see that you're doing that. Amaze asks, do you use anything more than SMAs for daily trading? I actually do not use SMAs that much. I personally am a big advocate for not using any indicators that are lagging, which is 99% of the indicators. So I actually only use price and volume 90% of the times. Recently, I've been using SMAs because we're in a very trending market. So it's very easy to just use SMAs because if something's easy, why make it hard, right? But yeah. So no, I use the only indicators I use is regular price, so that's not really an indicator. Volume, VRVP, which is visible range volume profile. We have, which is this thing over here, which is volume by price. We have a video on that as well, somewhere around here, how to use VRVP. Pretty great video. SMAs, I use that as well, but that's pretty much it. I know how to use every single indicator. I just realized that I personally like going according to live data because every indicator is delayed and lagged unless it's volume and price. Tom, which is Crash Out Capital, has been busy, but when he's free, I will definitely make sure he gets back on. Oh, okay. Oh, gotcha. Okay, gotcha. All right, see. Could you use today's trades, Uber JPM, as an example of why you entered a trade? All right, I'll make it very quickly. I mean, quick. All right, Uber. All right. I'm gonna give you 5 seconds to think about it yourself, and I'll say it. But this should be very easy to figure out. Uber. Reason I got this, few things. One, I use volume a lot. This volume after earnings is very high. 28.52 million is very high for earnings, so I like that. So one, we have a good volume candle. Two, there's a wick to the downside followed by a very strong body, which means that even though there's sellers present, not only were the buyers strong, but they were so beautifully strong that they pushed up the price all the way up here. The third thing is we're in a bull flag, right? There's that, right? We're in a bull flag. Three, we're above the 200 SMA. Let's just forget about that. And then the final thing was the fact that it wicked off the 20 SMA. It got above the 10 SMA. So if this is the risk I'm taking. I'm risking the fact that I believe it's going to start a new trend. So if it is starting a new trend, I believe that this is eventually going to cross over and going to continue to the upside to the previous high, which would be 97.50. So that's why I took that trade. Very simple. JPM. I'm going to give you 5 seconds for this one. This is even easier. Literally, you had, JPM's been very strong, just like majority of stocks, bank stocks. But you're finally below the 10 and 20 moving SMAs. But you see something that's very different about today is the fact that you had a very solid candle close below the 20 SMA. It's closed below the 20 SMA multiple times, but never with much strength to the downside. So that's why I entered this, right? Just a breakdown. You can see the volume was very high today, high selling volume. There's no such thing as selling or buying volume. But what I mean by that is you can infer that a lot of the volume that happened is probably going to be on the sell side versus the buying side, which means more people were selling versus buying. So, yeah. That's why. Do you guys understand? I mean, that's easy stuff. What's my volume indicator? Yeah, so it's called Market Smith volumes. So I'll code my own one, right? Because nothing's perfect without me, so I gotta code my own one. You know what I mean? But if we search up, you feel free to kill me anytime. But if you can search up Market Smith, do not press indicator, because that thing is chaotic. I mean, that thing pops up like 20 million things on your screen. So don't click that, just like I did right now. As you can see, it's just like it's crazy. But what you want to click is Market Smith volumes. So I'll just type that in again. Market Smith volumes is this one right here. It's by Fred6724. And I just changed it where the default is just a little bit too colorful for my taste. So I just made it bland because I'm a very bland guy. I still don't know how I have someone who loves me at this point, but I made them all gray. And the thing that I like about this indicator, the volume indicator, is one, I made a histogram, so it's a little cleaner versus the columns, right? So histograms is cleaner. And then on top of that, it has the SMA, which is just basically showing the average for a certain amount of time when it comes to volume. But the cool part is it shows you how much the current volume candle is below or above the average volume for whichever criteria is set it to. So since the SMA is set to 50, that means for the 50 candles that are here, this current volume candle is just 70% below, 7% below the average volume. But you could see that the average volume has been decreasing, right? Because the reason it's crept up was because of this whole thing over here. So it's called Market Smith volume, so you could change it up whichever way you want. I had no idea you had such an, yeah. Definitely check it out. All right. Any final questions? What's my Twitter? It's the greatest Twitter on earth. The Market Bishop. Mark my words, I will compete in the World Trading Championship. I definitely do. So that'd be cool. But we love you too, Lucas. Do I do send Bell if you miss? I'm sorry if I keep on saying I have a video on that, but I'm too tired to explain it. I have a video right on that. Why I wait the last 5 minutes to enter swing trades. Right here. Almost any question you have, I have videos stemming all the way back to 4 years. I'm 24 now, so wait, am I 24 or 25? I'm 24. So you can hear my voice back when I was 17 years old because these videos were taken a long time ago. So if you want to hear my very ugly voice back then, you can watch those too. But we do have a lot of videos. So a lot of questions you have towards me, you can see there. I made it in such a way where a lot of the questions you have for me, you can actually easily access. So not only do you have the YouTube channel and live sessions here on Discord, right? You also have on my bot, I have a how I trade document. A lot of people should be looking at this. I get so many pings, and I'm sorry if you've messaged me and I've not I have like I have too many messages. All right, so if you go over here, right? Oh God, I just doxed my name. If you go over here, you'll see I made this whole document of how I trade. It doesn't go into my strategy, but I don't know why even though it literally says this is not about my strategy. This guy said that this says very little about my strategy. It's kind of funny. But this talks about my trade ideas and how I work and how I trade, like my routines, like how I don't typically trade on Mondays, day trading, right? So it talks about that. So a lot of questions are actually answered here. I give examples about entry position, a brief way, description about how I trim, averaging down, runners, exiting trades, how I trade Tesla Fridays, right? Because that's a huge thing. I put the upcoming editions like 6 months ago and I never updated it since. But yeah, there's a lot of stuff you guys can look at to be able to answer a lot of questions you have for me. Or else in the YouTube. Yeah, no one has the editing access. So if you see any misspellings, that's just because I'm a complete idiot. That's not because of anybody else. They can only comment or suggest. But even I took that off because there was just too many and I couldn't read it all. But okay, that's gonna be the end of it for me. I'm pretty tired, and I actually. Oh, you were able to edit it? Seriously? No, you can't. You can only do suggestions. Hold on. Now you got me thinking. Yeah, you're a liar. You can only view, buddy. All right. Anyway, All right, I'm gonna head off. I'm legitimately actually gonna eat chicken biryani. I will see you guys another time when we have another live session. Thanks for coming on. Peace.